Gold has always carried a special kind of power. It's more than a shiny metal. It's a symbol of stability, wealth, and trust. For thousands of years, kings, empires, and now billionaires have used it to store value. And even today, in a world filled with digital money, gold still commands respect. So why do the rich keep buying it? And how exactly do they invest? Let's break it down. Welcome to the Ways of the Wealthy, where we help demystify the habits of the ultra-rich. For the wealthy, gold isn't about chasing quick profits, it's about protection. It's what they rely on when markets crash, when inflation eats away at currency, or when governments start printing more money than ever before. When uncertainty rises, gold becomes a kind of financial safe haven. It doesn't depend on a bank, a CEO, or an algorithm. It just sits there, holding value when everything else feels like it's falling apart. That's why, for many wealthy investors, gold isn't a growth play. It's a preservation play. It's the piece of their portfolio that says, no matter what happens, I'm protected. Gold's appeal also comes from its history. Every major civilization, from ancient Egypt to imperial China, used gold to measure power. When currencies collapsed, gold kept its worth, and when economies recovered, gold was still there, ready to be traded, trusted, and respected. It survived wars, debt crises, and revolutions, and that's exactly what gives it such credibility in modern finance. Another reason the rich invest in gold is diversification. Smart investors know you never rely on a single asset class. Stocks rise and fall. Bonds can lose value when interest rates climb. But gold often moves differently, sometimes in the opposite direction. So when markets crash, gold can soften the blow. It doesn't always soar, but it protects. That's why many high net worth portfolios include gold as what's called portfolio insurance. It's not meant to beat the stock market, it's meant to balance it. Now let's talk about the how, the methods the wealthy use. Most don't just buy jewelry or collector's coins. They invest in bullion bars, often stored in private vaults or secure financial institutions. Owning physical gold gives them full control. No middleman, no counterparty risk. It's tangible wealth they can see and touch. Others take a more liquid approach, using ETFs, gold funds, or futures contracts. These make it easier to trade and rebalance quickly. But because they're paper assets, many rich investors still keep a portion in physical form, something real that isn't tied to the digital system. In short, they use a mix: physical gold for stability, paper gold for flexibility. Typically, gold makes up 5 to 15% of a wealthy portfolio. It's not everything, but it's enough to make a difference when times get rough. That small slice acts as a shock absorber. It's the quiet money that protects the loud money. And make no mistake, the rich take it seriously. Every bar is certified for purity. Every vault is insured and regularly audited. And every exit strategy is planned ahead of time. Because when you're dealing with millions, even small details matter. But gold ownership isn't just about buying and holding. The rich constantly monitor global trends, interest rates, inflation data, central bank policies, and even geopolitical tensions. They watch for signals, like when real interest rates fall, or when central banks start hoarding gold themselves. Those are moments when gold tends to shine. Right now, many central banks, especially outside the West, are increasing their gold reserves. That's a signal big investors pay attention. It means confidence in traditional currencies is slowly shifting, and gold is once again being seen as the ultimate store of value. Of course, gold isn't perfect. It doesn't generate income. It doesn't pay dividends or interest. And storing it securely isn't free. But the wealthy don't buy gold for income. They buy it for insurance. It's their safety net against a system they know can break. In their world, the cost of storage is just the price of peace of mind. At the end of the day, gold's true power isn't in how much it gains. It's in how little it loses when everything else collapses. That's why the rich keep a portion of their wealth in it. Not to double their money, but to make sure that when the world turns upside down, they're still standing strong. Gold isn't the path to wealth, it's the protection after you've built it. And that's why the rich will never stop investing in it. Make sure to subscribe for more content on the habits and strategies of the ultra rich. And if you want to keep going right now, make sure to check our previous videos. Thanks for watching.